In this module, I'm going to jump onto my charts and walk you through the market timings. It's important to understand how to look at the charts, how to organize yourself when you're looking at the charts so you know clearly where you are in the market and what you should be looking for.
All right, let's talk about market timings. Now here in front of me, I've got the chart of XAU USD, aka gold. Now, first thing you want to do whenever you're looking at a chart is you want to break it down into days. You want to understand exactly which day or which time you are looking at on the screen. So what I can do is I can add in, you can see the faint lines in the background, but I like to add in my lines just to make it more clear, more defined. And we're separating the days. Now we know that we're separating the days because we're on the hourly chart. The hourly chart and the 15-minute chart can show you a good clear view of the day. Okay, so as you can see here, it's Wednesday, here it's Tuesday, Monday. And again, if I separate it out, you can see Friday, Thursday, Wednesday, Tuesday, Monday. So always get into the habit of separating your charts. Now on MetaTrader, you can actually turn on the period divider and that would help you. It would separate it automatically. However, on TradingView, I like to add in the lines myself so it's very clear and defined. Okay. Now, in terms of market timings, the market consists of 3 sessions. You've got the Asian session, the London session, and the New York session. Now the session timings are as so. The Asian session starts at 12:30, 12:30. And this runs all the way through to 7 a.m. So let's do that so we can see. And what I'll do is I'll make a short line so it doesn't interfere. So here we go, 7 a.m. I'm gonna draw a line just like that. Now we can see this area here was the Asian session, okay? Now between 7 and 7:30, there's what's called a gap time, okay? Now we'll come back to that and exactly what it means. Now coming into the London session starts at 7:30. So again, just there slightly, the London session would open and that would run all the way up until 1 p.m. So there we can see this area right in the middle is the London session, okay? Now again, between 1 and 1:30, there's what's called a gap time. And I'm going to explain what gap time means. And then we enter the New York session. The New York session starts from 1:30 and it goes all the way through to 8:30. So let me draw that in as well. And there we can see the New York session, okay? So remember those timings, those are the exact times for institutes. And what it means when I say gap times, so in the banks, in the major banks, when the Asian bankers stop trading at 7 a.m., between 7 a.m. and 7:30, what they do is they get on the phone, they call up the London session traders, the European bankers, whichever branch it is, they call them up and they discuss the orders that they had pending overnight. They discuss how many clients are long, how many clients are short. They talk about how many stop losses there are, how many take profits there are. They have all this information at their disposal and they pass it on to the next banker who will then start his session at 7:30 a.m. UK time. Similarly, when the UK session comes to an end at 1 p.m., they spend that time between 1 and 1:30 communicating to the New York session bankers. They explain to them the orders, they explain to them the books, etc., how many clients are long, how many clients are short, and then he transfers that information to the New York session. Then the New York session would carry on whichever trades that he needs to do into the end of the day. Now they will stop trading at 8:30 UK time, and then we have a gap between 8:30 all the way to 12:30. So between that time, it's a dead zone. There's not much volume, spreads increase. So you don't want to be holding trades overnight during those times because it will be of little value. And then as soon as it hits 12:30, the Asian banker comes online and he starts to do his day-to-day activity.
So there we had a look at the market timings. It's very important that you remember the specific times and also remember the gaps where the banks pass one information to the other banks. This is called cyclical trading, where they trade with each other as a team. Now, moving forward, make sure you always have your days divided and also keep an eye out where you are in which session and try to avoid trading the beginning of each session. I'm going to now explain more in depth the breakdown of the moves and the objectives the banks try to achieve.